What is up, YouTube? I'm Adam Odell, Chief Investment Strategist at moneyandmarkets.com. I am joined this week once again by my research analyst, Matt Clark, and we're here for another episode of Ask Adam Anything. Please leave a comment, leave a question in the comments below, or you can email us as well. We'll flash the email address, but we certainly want to hear all of the questions you have for myself and our team, and we're happy to sit down and take some time out of our day to kind of go over any question you have on your mind, because an educated investor is a better investor. So with that, Matt, I will let you take things away, and I think we have got an interesting question this week.
We do, and this one actually comes from a subscriber to your Green Zone Fortunes service, which we've talked about numerous times, and it's Thomas, and I'll get right to it, and then I'll give a little context if need be. But he said, "Hello, I'm a subscriber to Adam Odell's Green Zone Fortunes and feeling a panic. Can you tell me what Adam or the brains at Money and Markets make of the past 2 days back-to-back dips of 11% and 6% in the crypto market? Is this the beginning of a major crash like March of 2020? Do you recommend selling or holding if it continues?" And I will add to that I'm looking at crypto prices moving live as of right now. Bitcoin's down 4.5%, Ethereum down 4.5%, Solana's down almost 9%, Cardano's down 4.6%. So it's going to be another day, another rough day for crypto. But I think that's an interesting question, but one that may not necessarily have a very straightforward or easy answer.
Yeah, there's actually a good bit of complexity and a number of veins within that question. I'm happy to kind of unpack them. First, I want to speak to what Green Zone Fortunes, what we seek to do there in Green Zone Fortunes. And now we are building a well-rounded portfolio of stocks that we intend to hold for anywhere between 6 months and 3 years, certainly longer if possible, if the trends and momentum are still there, but that's kind of our sweet spot holding period. And we're looking for companies that are operating in mega trends that have above average growth rates, better than the economy, that are on the cutting edge of new innovative technologies, and that are opportunistic and disruptive fields like, traditional energy markets went through a disruptive period in the March 2020 crash. And we've recommended a couple of traditional energy companies, even though we're very bullish on EV and green tech. We know that the disruptions in the traditional oil and gas sector were too lucrative to pass up. So nonetheless, we're building a balanced portfolio that's meant to weather both the market's ups and downs. We use our Green Zone rating system, which looks at momentum, size, volatility, quality, value, and growth. So we're looking for well-rounded stocks. And because of that, we're not really in the business of trying to forecast the next market downturn. We don't believe that that's the best way to invest, and nor that it is very easy to do. So we do not try to do that. How many people did or did not see the March 2020 crash coming? It was one of those fastest and sharpest bear markets in history. So I would encourage this reader not to worry so much about whether an 11 or 15% drop over a couple of days in the crypto markets is going to tank the equity markets. And if you follow us in Green Zone Fortunes, you know that we're in well-rounded stocks that can go through the market's ups and downs. Now, speaking of the crypto market, again, this is a volatile market. My friend and colleague Ian King has said that this is the most volatile market that he has ever traded in his career. I started off trading Forex with quite a bit of leverage, so that's certainly what the crypto market feels like to me as a leveraged Forex trader. But nonetheless, another thing that Ian said recently, which I think is kind of good to put in the back of your mind if you're dipping your toes into the water of crypto, is that with a volatile stock market, with a volatile asset like stocks, it's often 3 steps forward and then 1 or 2 steps back. Well, you can think of the crypto markets as 2 or 3 or 4 orders of magnitude more volatile than that. So it's maybe 9 steps forward and 4, 5, or 6 back, or maybe even 15 steps forward and 10, 12 or so back. So there's a lot of volatility in the crypto market. I'm looking at Bitcoin and ETH prices, and we're still in an uptrend. We're still in a bullish market. We made new highs recently. This most current pullback is basically just a retest of those highs. So on Bitcoin, if we stay above 30 to 40,000, the longer term uptrend is still intact. So the key there is position sizing. If you position yourself small enough that these large swings don't affect your psychology and your day-to-day life, then you can be in it for the long run and really position yourself in an asset class that is unlike anything else and that has a lot of promise. So definitely check out. We'll probably link to it somewhere in here. Ian King is my friend and colleague. He is an expert in the crypto market. But personally, I don't see anything that I'm too concerned about as far as the trends and momentum in the crypto market, nor in the stock market at this time.
Yeah, and I think you nailed it right on the head. I mean, the crypto market is volatile by nature. There is no, it is more volatile than any other equity class that you can think of to trade. So dips like this are not uncommon. They're not. And so using that as kind of a rule, it's not necessarily a panic situation when we see them, because they happen, and they happen frequently, especially in the crypto market. So Thomas, definitely appreciate the question, and very happy that you're a Green Zone Fortune subscriber. If you're not, and you're interested in learning more about what Adam and Charles, myself, what we do, and about all that information that Adam was telling you about before, we'll also put a link to that up top as well, so you can find out more information about Green Zone Fortunes. Also, Ian King, great crypto guy really knows the stuff when it comes to crypto, the ins and outs. We'll link to that as well. But Adam, I think that's a good place to stop. Again, crypto market is down, but then again, crypto moves up just as fast as it moves down, so it's not one of those. It's not really a pain point. If we were to see this, and maybe that's a bit of a follow-up question. What if we were to see this in the equity side of things? What if we were to see this in the S&P or the Dow? Would that bring about a bit of a different change in perspective?
Well, sure. I mean, in the equity markets, a typical correction is a move of 10% off the highs. A typical bear market, by definition, is a 20% move. So you certainly, if you're seeing this type of volatility in the equity markets, there's more cause for be concerned. It's all relative, and that's the point. I mean, if you look at a 50-day moving average and a 200-day moving average of crypto, it's going to basically give you the same indication of trend and momentum as if you use those averages on a stock index like the S&P 500. So as we're recording this right now, Bitcoin has fallen 15% off of its highs, but it's still above its 50-day moving average, which is still itself above its 200-day moving average. It's making higher highs and higher lows. I'm a technical analyst, so that to me is a bullish trend that you want to be invested in, and you would start to manage your risk when the lows are taken out, when you're making lower lows and lower highs, and you have momentum divergences. But nonetheless, it's just the size of the moves. You can't really look at the numbers. You have to look at the trend lines and the moving averages, and it'll give you the same type of analysis as you can do in the stock market.
Thomas, appreciate your question. Thank you so much. If you do have a question, maybe you're looking at a particular stock or a sector of the market like crypto, or maybe, like I said, an individual stock that you'd like either myself or Adam or Charles to take a look at, feel free, do so. We'd love to see that. You can email us. That email address is feedback@moneyandmarkets.com. We're going to flash that right down there. Or you can comment down below here on YouTube. Do that as well. We look at both, and we take questions from both, and we'd love to see what you have to say. And if you do that, if you do submit a question and we do use it, we're going to hook you up with some Money and Markets gear, which could mean a t-shirt or a couple or a sweatshirt or a hat. Obviously, neither of which Adam and I partake in terms of the hat, but they are very cool. We have about 5 different styles, really nice. So the boss actually got this one right, Adam. He knocked it out of the park with the hats. They look very, very cool, and with the swag. But if you do email us, yeah, he is the hat guy. That's not us. That's not our thing. I have this I need to protect, and I'm just going to move on and just let that go from there. So if you do send us a question, whether it's on YouTube or whether it is through email, either way, we will get you hooked up with some swag. But that is all I have for you, Adam. Appreciate it. Look forward to doing it again next week.
Sounds great. Thanks a lot, Matt.